USD Coin, the stablecoin pegged 1.1 to the US dollar, has quietly become one of the most important assets in the crypto world. While Bitcoin pumps and downtimes make headlines, USD Coin stays steady, not volatile, not speculative. But here's the real question nobody asks. Is USDC just boring? Or is it the foundation of every modern crypto trader's strategy? Today, I'll break down what USDC is, why traders and institutions use it, how it protects your capital, and whether it's worth holding in your portfolio. And hey everyone, welcome back to Promo, your trusted source for deep crypto intelligence, real asset breakdowns, and non-hype investment education. Today we're unpacking USD Coin, USDC, a stablecoin that's used more than most people realize, especially by traders, institutions, and DeFi platforms. By the end of this video, you'll truly understand why some call USDC the digital transfer infrastructure of Web3. Section 1. What is USD Coin, USDC? USDC, short for USD Coin, is a stablecoin formally pegged 1.1 to the US dollar. That means 1 USDC, dar 1 USD. It was created by Circle and operates in partnership with Coinbase under the Center Consortium, and its reserves are audited to ensure stability and transparency. Unlike Bitcoin or Ethereum, which fluctuate daily, USDC is designed to hardly ever move from the $1 value. Section 2. Why stablecoins matter in crypto. Stablecoins like USDC play a unique role. They let traders park value without going back to a bank account or fiat system. In markets where Bitcoin can swing plus 15% in a day, stablecoins offer capital safety and predictability. Institutional traders, hedge funds, and even exchanges rely on USDC to liquidate positions without leaving crypto rails. Section 3. Why traders love USDC. Professional traders use USDC as a temporary safe haven during market volatility. When Bitcoin or altcoins plunge, traders exit into USDC instead of USD, which means they stay fully inside the crypto ecosystem. This allows them to re-enter positions quickly when the market rebounds. Section 4. USDC in DeFi and blockchain ecosystem. USDC isn't just used on exchanges. It runs deep into DeFi. You can deposit USDC into lending protocols, earn interest, provide liquidity, and even use it as collateral for loans. This makes it not just a trading tool, but programmable money inside smart contract ecosystems. Quick pause. If you're learning something new about stablecoins, tap like and subscribe to Promo. Comment below. Do you use USDC in your trading or DeFi activities? Let's continue with how and where to use USDC safely. Section 5. Where people use USDC most. USDC is primarily used for crypto trading, stable liquidity pools, cross-chain transfers, DeFi yield strategies, usage breakdown of stablecoins, industry reports. It's the default base pair in many markets because it consistently holds dollar value. Stablecoin pairing in exchanges, crypto guides. This means even low-cap altcoins are often quoted against USDC. Section 6. How to buy and store USDC. Buying USDC is extremely easy. Sign up on an exchange. Deposit fiat, search for USDC. Buy and hold. For security, enable two-factor authentication and consider hardware wallets for long-term holding. Hardware wallets like Ledger and Trezor allow you to keep USDC under your control. Section 7. Advantages of USDC. Why professionals actually use it. Let's be honest. USDC is not built to entertain you. It's built to protect your money. And that's exactly why professional traders, institutions, and crypto funds rely on it. 1. Rock-solid price stability. While Bitcoin can drop 10% overnight, USDC stays at $1. That stability allows traders to protect profits, avoid emotional panic selling, plan strategies with predictable value. In volatile markets, stability becomes power. 2. Ultra-high liquidity. USDC is one of the most liquid assets in crypto. That means you can enter trades fast, exit positions instantly, move large amounts without slippage. Liquidity equals freedom of movement, and smart money always wants flexibility. 3. Institutional trust factor. Banks, payment companies, hedge funds, and fintech platforms use USDC because it operates with transparency standards and reserve backing. This makes USDC feel less like a risky token and more like digital cash with blockchain speed. 4. Multi-chain power. USDC works across multiple blockchains: Ethereum, Solana, Polygon, Avalanche. That means faster transfers, lower fees, more DeFi opportunities. It's not trapped on one network. It flows across ecosystems. 5. Perfect trading pair. Almost every major crypto asset is traded against USDC. This makes it the bridge currency of the crypto economy. Without USDC, modern crypto trading would be slower, more expensive, and less efficient. Section 8. Limitations of USDC. Real talk. No marketing lies. Now let's talk about the uncomfortable truth. USDC is powerful, but it's not perfect. 1. No price growth potential. If you're chasing 10x or 100x gains, USDC is not your coin. It's designed to stay stable, not to grow in price. That means no moonshots, no speculation profits, no hype rallies. It protects money. It doesn't multiply it. 2. Centralization reality. Unlike Bitcoin, USDC is not fully decentralized. It depends on companies managing reserves and compliance. This means accounts can be frozen. Regulatory rules can affect usage. Trust is required. That's a trade-off between freedom and stability. 3. Regulatory pressure risk. Stablecoins are now in the spotlight of governments and regulators. As adoption grows, rules will increase. This could affect usage policies, transaction limits, platform integrations. So USDC users must stay informed. 4. Psychological trap. Some traders stay in USDC too long out of fear, missing real market opportunities. Stability is good, but overcaution can also slow portfolio growth. Balance matters. Section 9. Who should use USDC? Is it right for you? USDC is not for everyone, and that's okay. Perfect for active traders who move in and out of markets daily, profit protectors who want to lock gains without cashing out to banks, DeFi users who earn yield through lending and liquidity pools, international freelancers who receive fast, low-fee global payments, crypto businesses who need stable digital cash flow. Not ideal for people chasing hype coins, long-term growth investors only, those expecting price appreciation, speculative gamblers. USDC is a tool, not a lottery ticket. Section 10. Future of USDC Strategic Outlook. Now here's where things get interesting. USDC is not trying to replace Bitcoin. It's trying to replace slow traditional money movement. The big picture. As crypto adoption grows, more payments move on blockchain. More businesses accept digital dollars. More banks integrate stablecoins. USDC becomes the bridge between old financial systems and Web3 infrastructure, payment expansion. In the future, USDC could power global salary payments, cross-border remittance, online subscriptions, creator economy payouts. This turns USDC into a financial backbone, not just a trading tool. Institutional acceleration. Big money moves slowly, but once institutions commit, volume explodes. As regulations become clearer, large financial players will likely increase stablecoin usage for settlement and transfers. That's where USDC growth comes from. Not price pumps, but adoption scale. Final verdict. USD Coin is not flashy. It's not designed to make you rich overnight. But if you value stability, seamless trading, and deep integration into crypto's backbone, USDC is one of the most essential assets in the entire space. Thanks for watching this USD Coin deep dive on Preo Promo. If you learned something valuable today, hit like and subscribe. Comment below. Do you think stablecoins are the secret backbone of crypto? Stay smart, stay informed, and I'll see you in the next video.